In this video, I'm going to discuss a chart that has a trade setup that I call a start point reject initial reverse. We will talk about the setup components individually and as a combination. Always remember that it is the combination that makes the setup and not any individual component. Consider the language in the setup. Start point, reject, initial reverse. A start point initial reverse or a rejected initial reverse do not give the same setup, and regardless of whether the combination exists, a start point reject initial reverse entered 5 ticks from a floor number is not tradable, because that would be a trade directly into support or resistance and a trade that you should not expect to continue. So for any trade setup that you may have, it is also very important to understand what the trade is being entered into and whether it can continue. What is a start point? And specifically a swing reverse start point. Anyone that has ever tried to pick a top or bottom has done so by using tools that we would use to locate a start point. The start point to a new swing or swing reverse is first the end point to an existing swing. On this chart I am showing you the end point to a buy swing, or in essence I am picking the top. Many people would simply do this by using some indicator that shows extremes. This is not how we do this. Regardless that our MEX indicator, the purple-blue lines, will typically be extreme at a start point. To us, a swing reverse start point is primarily one of two things: a double top or double bottom, a price momentum divergence high or low. A price momentum divergence means that price has made a higher high or lower low, but momentum has made a lower high or higher low. Now note, you could have a double top that ends the swing like the top drawing, or you could have had that PMD high only. These would be start points only. To be a start point reject, the start point must be at a resistance or support location. You must have something that rejects. The chart shows a double top, but it's not like the drawing in right side only. It is across the chart at resistance, that resistance being the yellow line and that swing high. Additionally, there was also a PMD high at the same combination, which makes it even better. The more different things that combine into a trade setup, the more selective the setup becomes, and with this, the higher odds of the trade being profitable. A PMD can be part of a start point reject and not also be a double top or double bottom. Like the bottom drawing shows, a PMD high at a floor number would be a start point reject, with the floor number being the resistance area that was being rejected. You have a start point reject, and now you have the swing initial reverse. The initial reverse from a buy swing to a sell swing comes from the following combination. MEX, those purple-blue lines, have crossed. The purple-blue dots that you can see on the chart have shifted to purple on top. The momentum indicator, that is the green-red histogram, changes from green to red. So you now have a swing reverse that is a start point reject initial reverse. Before talking about a sell, let me make a comment on trade management. If the start point reject is going to be the start of a sell swing, then this is also an indication that the current swing would be ending. If the current swing is going to be ending and you are in a buy, then you have an opportunity to exit your trade before the reverse and with very little profit give back compared to waiting for the initial reverse. I would call that exiting on strength of movement. You have a start point reject initial reverse trade setup, but that does not mean that you have a trade that you can take. That will be determined by what the trade is entered into or whether the trade setup has a trade filter. I will discuss trade filters in further detail in another video. This is a core difference between trading a system and trading a method like we do. If you have ever exited a trade or entered a new trade just to have it immediately go against you, then likely you have made your decision into a filter. Consider a filter to be something that has greater odds for holding and rejecting than it does breaking. In context, this is the same as the start point concept, where you would not enter a trade directly into a double top or into a PMD high because the greater odds are for a reject. So you have a start point reject initial reverse trade setup, but you have no trade that you can take. You cannot take the trade because it would be entered directly into a floor number as support, and thus there is a greater odds of reject than there is a breaking. If you did not exit a buy at the start point reject and are trailing, then I would suggest that you hold your trade for the reject versus exiting on the initial reverse only. In this case, your filter is the floor number as support. Look at the drawing and the yellow dot. This represents your start point reject initial reverse sell directly into the floor pivot. The trade can't be done because there are greater odds for reject and resumption from this point, like the blue dot, than there are for a break and continuation. And if you were long and didn't exit your trade at the double top PMD high, then the initial reverse would not be a good exit. You have waited this long. Don't now exit at the point that can hold your trade and resume it. This chart shows the actual chart and what is a textbook example of a start point reject initial reverse at the red dot. You know about the start point reject and initial reverse setup components, and you know that you aren't entering into a trade filter like the example previously shown. Now let's talk about two additional components that were involved: the initial reverse price and the entry for the trade, the diagonal breakout potential from the previous swing that is continuation for the trade. If you will first look at the PMD high to the red dot, you will see a retrace to the purple line that moved back to the yellow-blue line, and then the purple line broke. The purple line becomes a channel that syncs with the area of the initial reverse, and the break of that price becomes the failure of the price. Failure of what? Failure of the price to become support after the PMD high. Now, if you will look at the previous swing where I have labeled diagonal breakout potential, this is the continuation aspect of the red dot sell. There is nothing in the way between the red dot and the yellow line that would be viewed as support. Again, like that floor number filtered the start point reject initial reverse on that previous chart. Many people simply think of this as a trend line, and yes, I could start at the yellow line and connect points and draw a trend line, but that is not what a diagonal is in this method. In order for a trade to have diagonal breakout potential, what is called a diagonal must come from the previous swing versus drawing a trend line that would simply connect points but could cross multiple swings. Why the differentiation? Because I have observed that there is ease of movement through a previous swing diagonal that does not come through a trend line that crosses swings. With this observance also came the concept of partial profit expansion. When I take a trade, I do so with a base partial size of 10 ticks. You can see where I have that labeled on the chart. However, on this trade, the partial was expanded to 19 ticks and taken at the double bottom low, which is the previous swing diagonal low. This being a function of having nothing as support inside of the diagonal and letting the diagonal try to fill like this one did. I'm going to conclude this video with a concept scenario drawing of the chart we have been discussing. The scenario drawing is supposed to be specific to a given scenario, in this case the start point reject initial reverse trade setup and when it is best traded. Additionally, the drawing should be an accurate representation of the chart with the setup, and thus to better become able to visualize the setup as it develops while trading. Here is the drawing representing the scenario and labeled with the concepts. Double top PMD high start point. Reject because it is left-right. Initial reverse price failure entry with diagonal breakout potential that is continuation and that can be used to expand the trade partial size from that of a base partial.